Out with results, the stock's actually down a little bit right now. Wilfred has the details. He joins us right now. Hey, Wilf.
Hey, guys. Yeah, just diving into it. So it looks like on the headline the EPS is missed, but there's a one-off, so we've got to strip that out. But first of all, revenue, 9.96 billion. The expectation was 8.5 billion, so that's a big beat. The EPS expectation was 5.46. It came in at 4.69 on a reported basis. Looks like a miss, but there's a $1.1 billion litigation charge in there. If you took that out completely, it'd be 764, so a huge beat. There's always a couple $100 million, or not always, but typical to expect a couple $100 million of litigation each quarter, so you can't necessarily strip it all out. But assuming the litigation charge was a quarter of the size as it is this quarter, then you'd still be above $7 or so EPS. So it's still a big beat on EPS on both lines. If we dive into the individual lines, I'm just looking at this as we go. The investment banking revenue came in at the investment banking revenue came in $2 billion, so that's fractionally ahead of expectation. The expectation was 1.9. FIC trading, fixed income trading, like the others, is a beat, and it's a healthy beat, not quite as big as JP Morgan. So that's come in at 1.8 billion. The expectation was for 1.2 billion. Asset management, just coming through that page. I don't know if we've got these double-sided, but I'm going to keep diving into the other numbers for the individual lines to see quite where all that revenue beat came from. But FIC was definitely part of it. Asset management coming in at 3 billion accounts for a large part of it. So there we go. 3 billion asset management. Expectation was 2 billion. So big beat in asset management, decent beat in FIC.
It's been up, it's been down, now it's unch, basically.
It was up 9% over the last month coming into this. So, of course, they announced their new reporting structure about a week ago. It was up about 5% relative to the banks index coming into this week, and up about 9% over the last month coming into this. So it had a tough setup. But I think there's a big confusion here on the EPS. 4.69 reported. If you fully strip out the litigation charge, then it's 7.64. The expectation 5.46, somewhere in between that. But I think when the analysts have gone through all of this, don't forget it's a new reporting structure as well that confuses things. That it's a beat on both lines, and quite a healthy beat.
All right, Wilf, thank you. Stay with us for this. Mike Santoli is here too, because we asked him nicely. Mike, what do you think?
Yeah, I mean, obviously, I do think that it's about exactly how much of this extra litigation and legal expense. A year ago, in the final quarter of 2018, it was about $500 million in legal charges. This was a little over $1 billion. That suggests that the increase in expenses over the 1 year is about $500 million. So who knows if the last year was also normalized. I do think that the upside came from the asset management business, as Wilf said, which is, I guess, the area of the firm that's now being reemphasized. It's more kind of the steadier, perhaps higher valued business in terms of the way the street treats it. So it seems like a very good number, and certainly a very big revenue beat, which you can't really deny. So all around, it seems in tune. The question is, the stock's been on a great run, and how much of this was already built in is absolutely the question.
I'd weigh in on that asset management part as well. So as we said, 3 billion revenue, expectation was 2 billion. The reorganization, which basically got rid of the old segment known as investing and lending, saw the lending part sort of put into each of the relevant departments based on who the client was, and the investing part went into asset management. Nonetheless, this is still a beat relative to expectations, readjusted expectations over the last week. But the question mark as they go through it and as they go through Investor Day at the end of the month is whether people want to put the full multiple that a classic asset management division would have on that full 3 billion of revenue, or whether they're still getting their heads around exactly what type of investing this is and how sustainable it is, how much growth will come from that area in the past. But a big beat in that department, decent beat in fixed income trading. And just look at the headline revenue. And this, of course, whatever department anything falls into, readjusted departments, it all adds up to the same thing. They're expecting 8.5 billion. Revenue, and they got close to 10 billion revenue. So again, litigation charges or not,
more than the litigation charges that were unexpected.
Exactly. So you've got a decent beat, whatever happens. Still some question marks over the individual departments, which we'll learn about more on the call and at the Investor Day. But decent beat, and and the shares were up strongly, up 9% over the prior month.
Mike, we are not through bank earnings season yet, but we've gotten a bunch of the big guys that are out there. JP Morgan and Citigroup yesterday, Bank of America, and now Goldman Goldman Sachs today. I guess this is what you've been talking about: outperformance,
yes,
strong performance.
You had very friendly markets in the fourth quarter. That's kind of marking up all these, all the markets-based revenues and fees, and I think that's been a tailwind. And no adverse surprises along the way, right? There's no credit potholes that anybody has stepped into, and obviously, there's enough to go around on the trading side. So far, for everybody, we have Morgan Stanley still to come.
Right. Wells Fargo we heard from yesterday as well. So the 5 big banks we've already heard, and this is the takeout that you're getting right now.